All right, what's going on, everybody? Welcome back to the channel. It's Millennial Trade. So the big story of the day, the dollar gains on pretty decent economic data. Maybe a year ago, I would have thought, oh, the stock market would love this data when we got the GDP news out, when we got the jobless claims out. But no, the market does not like this data because at the next FOMC meeting, I'm sure the Fed is going to consider all of this and consider how well the numbers came in better than expectations, like on the jobless claims. I think even on GDP came in a little bit higher than expected. They're going to think that maybe their rates are not working. Perhaps they need to raise rates higher. I mean, that is the big danger here, is that they're going to go past 5%, that they're going to continue to raise, that there's no pivot anytime soon, no cuts for interest rates anytime soon. So this is why we saw the market fall the way it did. But markets tanked. I mean, these moves were absolutely incredible. You should have seen it in pre-market too. I mean, this is what gets frustrating because you see a lot of volatility sometimes pre-market, and you think, oh, if the market was open and I could have bought options on that move and the move happened after the open, it would have been so easy. That's just how it goes. So if you wanted to short, you had to go short first thing in the morning, and you had to short after these markets had already fallen, by 1% before the market even opened, like during pre-market. So it was a little scary going short after such a big move, but you just saw everything lining up in our favor, right? You saw the good economic news coming out. It was the GDP, the jobless claims. I mean, right there, that told you that the economy is still hot. Now, how accurate are these numbers? I don't look into them that deeply, to be honest with you. I'm not that interested. I don't think it, what I know about the GDP numbers is that if you do look into it, you look at the military budget and a lot of the government spending, all of this is included in GDP. So even though the GDP, U.S. economy grows more than expected on an annualized rate, it's 3.2%. In quarter three, better than 2.9, which was the second estimate. What does that mean for everyday Americans? Probably not much. We're still paying more for less. People are still losing their jobs. And I heard Peter Schiff talking about the possible layoffs coming. Think about this. This is an interesting idea. Because it's, almost Christmas, right? Nobody, no boss, no company wants to be the Grinch and wants to lay off all their workers right before Christmas. So are we going to see more layoffs after the holiday season, going into January and February? Peter Schiff thinks we're going to see tens of thousands of people laid off from everything from Amazon to Pepsi, right? It doesn't really matter. All of these companies are going to be making huge cuts to their workforce. That's according to Peter Schiff and according to others as well. So yeah, going back to the price action here, I mean, on the NASDAQ futures down 2.5%. On the S&P 500 futures, we're down nearly 2%. Volatility index spiked up a little bit today. We had the VIX. The VIX is up, let's see, I think it's like 9% on the day. Whew! So maybe a little bit of volatility coming into the markets. PayPal I was looking at PayPal's price action. I mean, it had a substantial rally. It almost looks like a V-shaped recovery on PayPal. I was watching it, didn't take any trades on that. My trade today did go well. I'll just kind of give you guys a little recap here. Oh, and by the way, TLT, the bonds, still struggling. It looks like the bonds are about to sell off big. I'm calling it now. I think TLT is about to sell off in a big way. Maybe I'm wrong. Hopefully I'm wrong about that, because that'll probably drag the markets down. But my trade today went well. We traded PayPal. Just saw a little bit more opportunity to the downside on PayPal than I did Amazon, but you could have traded either or. It didn't really matter. I was in this trade about a half an hour. I had scaled in. I went in deep. I was like 40 contracts to the short side with puts. Yeah, I know. It sounds like a lot, but the puts were like, I bought some of them at like less than $70 right at the open. It was the $85 put. And those contracts, went in my favor fairly quickly. I took my gains. I ended the day with like $750 up. So I managed to get over $11,000 in the account which was great because I did that yesterday and then screwed up royally and gave all of it back and then some and ended up, $400 down on the day. So today was great, ending up $750 and just seeing it above $11,000 again, it just proves to myself that I can do it, right? I did make some deposits though because I don't like having a lot of, especially if that's a big portion of my cash. I don't want it all in one place. So I made some deposits, but also I felt like having over $10,000 in my account right now, maybe I just need to cool off a little bit. We talk about the economy needs to cool down. I think my account needs to cool down a little bit too. These are some crazy gains. So I still got almost 9,000 in the account, but I took, almost 3,000 out. I had to, because what if something happens? What if TD Ameritrade faces liquidity problems and then I got all this cash, locked in there that I couldn't get to? That could happen. So you always got to be thinking this way. TD Ameritrade, pretty reputable, owned by Charles Schwab, definitely insured by the FDIC and all that good stuff. But again, it'd be better not to keep all these gains in one place. So we're going to go for 10,000 again, probably next week, if we do end up trading. Tomorrow, the only reason I want to stay in the markets tomorrow is for the PCE data, right? Because if the inflation data comes in hotter than expected, which it may not, because some of these other numbers from Canada, there's just some other indications that perhaps inflation is actually slowing. I know there's people calling for disinflation and then deflation pretty soon, maybe because of the Fed's interest rate hikes. But yeah, if demand is still extremely strong, and the inflation numbers are, if the PCE data is not where the Fed's going to want it to be, we're going to have some trouble going into February. We might see more hikes. We probably will see more rate hikes. Unless these are all just credible threats, right? When the Fed kind of front runs the markets and says they're going to do something without actually having the intention of doing it, hoping that the markets are going to react in a certain way, which isn't that technically market manipulation? We talk about all the market manipulation. The Fed is one of the biggest market manipulators there is with their credible threats. They've talked about this. Uneducated Economist does a lot of informative content about the concept of credible threats, where it came from. I think it might have been Bernanke or Greenspan. Maybe it goes back further than that. But the Fed has been aware of the idea of credible threats for a very long time. So with the interest rate hikes, is it just a credible threat? When Bullard says 7% interest rate hikes, is that just a credible threat? Hoping that the market reacts in a certain way? I don't know. There's no way to know. I guess we're gonna find out. We're gonna see how it plays out. At the end of the day, one can only speculate. But again, that's the only reason I want to stay in the markets tomorrow, is just to see what happens with the PCE data, see if there's any inflation or any anticipatory moves you could make, reactionary moves that you could make, shorting in supply, buying in demand. PayPal actually looks like it hit demand. You've got the green volume on the daily just go look at the PayPal chart. It's looking like a little buy setup. I'm not even gonna lie. The rest of the market looks horrible, but PayPal, I don't know. The volume is going up and it's green. And then you have this huge bottoming wick today and closing not higher than where we opened, but closing higher than, we didn't close at the highs, but we closed on PayPal higher than the open. Yeah, I'm pretty sure that's what that looks like. So I don't know. We'll see what happens, but I'm definitely going to be careful, because with trading this year, just checking the time here, 9 minutes into the video. With trading, I'm a big on the year, a big on the month, a big on the week, a big on the day. I don't want to do anything to ruin this. So I don't want to get caught in this mindset where it's like, oh, it's almost the end of the year. I'm going to be lazy, or I'm not going to take as much risk, or whatever it is. It's not that I want to slow down, but the more capital you start growing, you got to start thinking about, well, how am I going to preserve it? Which is exactly what happened yesterday. And I'm glad I sold those calls when I did, because by the time Amazon by the time Amazon opened today, the market opened today, Amazon was like dollars down away from the strike price on my calls yesterday. So that was the right move. I'm glad I didn't hold that shit overnight, because I thought about it. I thought about it, but I didn't do it. and I only lost like $400 yesterday. And it was tough. It took me, because I hate losing. So I had to go for a run. I ran for like an hour trying to shake that off, And today I was up, went to the beach because honestly, I'll confess, the weather does not look like this right now. It is rainy. It is cold. It is about to get colder. But this morning, this morning, like about 11 o'clock, it was still like 60 degrees, not raining yet. So I went to the boardwalk, got that run in, filmed a couple of, reels for Instagram and stuff like that. And, this is why we're trading, so that we have time to do other things that we love. Like, well, why sit in front of the markets all day trying to, I made 1,000. I can make another 1,000. I don't know. To me, that's a setup. To me, I'm going to get caught up if I sit in front of the markets trying to, scalp all day long. I just need that one quick good move in the morning, and then I'm fine. I still follow the markets. I'm still reading the news and stuff. But yeah, that's the big story today, guys. The big story is that, between the jobless claims, the GDP growth, we'll see what PCE looks like, but the economy is still strong, right? That's what they're telling us. That's what the Fed is going to be reacting to. Their next FOMC meeting, I think, is in February. And the dollar strengthens. Not the market didn't strengthen. The stocks didn't strengthen all this good economic data. The dollar did. The dollar rose. I mean, look at the dollar's price action. I am glad to be like, I don't know, I'm probably 80% in cash altogether. Like, just with all the cash in my accounts and my banks in the state, I'm like 80% in cash. So it feels great. My dollars buy more stocks this afternoon than they did this morning. So I love being in all cash right now. I love it. I think it's great. And I think it's great for Americans because, like, if our dollar is stronger, yeah, it's going to help our economy. But we do need to be aware of the fact that a lot of other countries are getting absolutely demolished. And I do want to talk about that real quickly. But here's a headline I found from Bloomberg. Digital dollar is a long way from reality, the U.S. Treasury official says. So the U.S. Treasury is saying that there's no need for a CBDC at the moment, and the Fed will not and cannot issue one without Congress and executive support. So just look out for that, because I know there's a lot of talk about the digital dollars. The Fed is, trying to put us into recession so that they can start cutting rates, and then they can go to zero like the Bank of Japan is doing, and then go into negative interest rates and suck the cash out of the system, because you got to pay to make deposits. You got to pay to hold your cash. Is all this stuff true? Where's my article? I just lost this freaking article that I needed. Oh, here it is. So yeah, we need to look out for that. If there is talk of CBDCs and everything, and talk of actually literally doing it, it won't just be from the Fed. Remember that. It's going to come from Congress, going to come from the Senate, probably going to come from the administration, whatever administration might be in office at that point. So those are going to be the people that are really going to be pushing for central bank digital currency, not necessarily the Fed, right? The Fed just can't do it. They'd have to... they are independent, right? And Biden has reaffirmed the Fed's independence, which I think is crazy. We've got this one company, and that's basically what it is. It's a company, a private company with no oversight, that can basically do what it wants. And they set this up 100 years ago. Just think about this. Like, there's a company that perhaps is even more powerful than the American government. And then it makes you wonder, well, where are we getting all the money to send overseas, to send to Ukraine, to finance these wars? Does the Federal Reserve finance the wars? These are very deep topics. Some of them would probably get you in trouble. So we don't want to go too far down these rabbit holes publicly, I suppose. But yeah, with the CBDCs and everything, we probably are a long ways away from that. But the first step would be cutting rates, going back to zero, and then going into negative interest rates. I tried doing some research about Japan's negative interest rates. Apparently, though, I guess it ends up in the form of credits on like your credit card, right? So even if you had to, pay to hold money, cash in the bank, they'll credit you on your credit card. So the whole system. They want a whole system based on debt, and they don't want to abandon that system because I think that's the overall plan, is to just kind of keep the masses, the peasantry, right? The modern peasantry, whatever the peasantry would be in the sort of digital age that we live in. They want to keep all of us in debt, perpetual debt, the future generations in debt. So I suppose it's kind of like a maybe a feudal thing. I don't want to get too political here, but when it comes to the dollar, you have other countries searching for alternatives to the dollar. This is coming from finance at yahoo.com. And this was a really interesting article. I won't quote it too much. I just want to sort of talk about it. But because of basically the weaponization, politicizing the dollar, weaponizing the dollar in geopolitics, the way that the U.S. has, we're forcing not just Russia, but other countries as well, Asian countries, countries in like Kazakhstan, some of these big commodity countries too are starting to look for alternatives to the dollar. And when transacting with Russia or China, these countries they're trying to figure out ways that they can have payment systems where they can just circumvent the dollar entirely. And some of them are already doing this. I think China and Russia has come to some sort of agreement. China and Saudi Arabia has pled with China to do something like this. I don't think China, to be able to accept yuan for their oil. We talked about this a few weeks ago. I don't think China's signed on board with it yet. But this is essentially what this whole article was about. And, you've got all of this dollar strength as well because we have this monopoly on global payment systems. And other countries are eventually going to figure out a way out of that. But the way that the U.S. and the administrations usually take this is that it's a bad thing. But it kind of makes sense that local countries in Asia, whether that's Laos and Vietnam, whatever, it would make sense they want to do business in their local currencies. But America always sees this stuff as a threat. If it doesn't include America, it's bad. And this is the sort of post-World War II globalist foundation that's been set by the West. Basically non-U.S. investors and nations, companies, banks, they're forced to diversify their holdings where, before the war and before weaponizing the dollar, a lot of them were happy to hold a lot of these assets in, dollar-denominated ways. But now they realize we need to divest out of the dollar and diversify into other currencies or whatnot, because first it's Russia. Well, who's it going to be next, right? Who are we sanctioning next? Who are we going to try to cut off from the payment systems next? And it also forces these countries to not be able to be neutral when it comes to another quagmire like Ukraine. And speaking of Ukraine, I don't want to get political here. I really don't, but my fear is that this is going to be a quagmire that lasts for decades, that there's no definitive, winner here. It's awful. The Ukrainian people are being used as pawns by both the Russians and the U.S. Sending $100 billion, right? We signed over, after Zelensky came yesterday, we signed over, I think it's another $50 billion they're supposed to pass in this bill. It's called I call it the ominous bill. I mean, that's what it is. It's really ominous. But they want another $50 billion. Zelensky wants another $50 billion. So it's like now it's $100 billion. Where is the cap on, supporting this war in Ukraine that I suppose it's they want us to believe it's a matter of global food security because Ukraine supplies so much of Europe and the rest of the world with food. But what's the cap for Americans, American taxpayers? $100 billion? Is that the cap? I don't think so. Is it $200 billion? Is it $500 billion? Do we have to contribute $1 trillion to Ukraine? I mean, when does it stop? And with Zelensky, we could do a deep dive in him later, but from my understanding, this guy kind of rose up on TV as like a TV comedian, making fun of the Soviet leaders after the fall of the Soviet Union, making fun of the different presidents of Ukraine. if you try to make fun of Zelensky, right? You try to do a parody of Zelensky, you'll probably get banned off of social media now, and this is the sort of double standard. These certain people, they can make fun of you, but you make fun of them, and it's gonna be hell. You're gonna get banned. You're gonna get debanked. And I think a lot of this has to do with why we're being extorted by Ukraine now. Essentially, I mean, that's what it feels like, in my opinion. And this guy gets off the plane to greet the president of the United States. Not only that, but to ask them for another $50 billion in a camo green tracksuit. I didn't even took the time to fly over here. Supposedly he's fighting this war on the front lines, but has the time to fly over here, has the time to make the trip, and they can't even hook him up with a suit to greet the president properly like every other world leader would. War or no war. So, I mean, you think Putin's in a camo tracksuit right now? I mean, come on. I think a lot of Americans felt disrespected, felt a little slighted by that. Maybe he didn't mean anything by it, but to me, it was kind of symbolic. It just showed that, I'm here to get $50 billion from you, and I'm going to get it, and I'm not even going to dress up for it. Right? I'm going to wear my shittiest clothes. That's what it said to me. That was the message that was conveyed to me. And again, I can't figure this out because I follow him I do follow the guy on Instagram. He's interesting. I like some of his camo green tracksuits. I'm getting a few fashion tips from the guy. Right? So it's not, I don't hate him. I don't hate Zelensky. All right? I don't want to put that idea out there because I don't. I follow him on Instagram, but I'm trying to figure this out. He's supposedly fighting a war on the front lines, fighting Russians. I mean, they have him posing with guns, shooting at Russians and stuff. If an American politician posed with a gun, well, then they're a crazy right-wing, Marjorie Taylor Greene type. But Zelensky posing with a gun, actually trying to shoot at Russians, well, he's a hero. He's man of the year, right? When does he have time to actually do this? Because I see him on social media. The guy posts more on Instagram than I do. What's going on here? Anyways, like I said, I don't want to get political, but that's just some of my thoughts on some of these recent current events, and I don't want to talk about it anymore because if I do, I'm gonna get heated. Let's talk about commodities real quick. We have the commodities all coming down. U.S. natural gas futures fall to a 9-month low. You have oil falling to after a 3-day rally. Gold as well. Gold drops more than 1%. I think silver's down 1% after all of this U.S. data that came out, the good data, possibly prolonging Fed rate hikes and everything. Yes, generally we want to see commodities come down. It usually does help the markets. Today it did not. Today the markets came down with commodities. And if we go into a deflationary scenario, perhaps we see something like that where the stock markets and the commodity markets, prices of everything just sort of fall. And that will be painful, right? The inflation's uncomfortable, but I'll get into deflation in another video, but that will be painful for Americans. So let's be careful what we wish for here. The last thing I saw was FTX founder Bankman-Fried released on a $250 million. Where'd he get the $250 million from? This guy owes billions to people he quite possibly defrauded. Where is he getting $250 million bond for? I guess somebody's helping him out with it. And I told you guys this. I think his parents are involved in this scheme. Some people think his girlfriend may have rolled over on him. I've seen some clips of this girl, Caroline Ellison. What a weirdo. You think Sam Bankman-Fried's a weirdo? This girl's even weirder than him. I mean, just everything about her, everything she says. She admits to not taking stop losses, admits to taking huge losses. Oh, man, what are these people doing? So, yes, it's been a great year for me, despite all the political drama, all the financial drama. I'm happy about where the dollar's at right now. I think the dollar's strong. I'm in dollars. I've got dollars. I'm pretty happy about that. I can get more dollars on a daily basis. If people are not trading or not figuring out these markets, and I know everybody is not going to do it. Not everybody's going to find the channel. Not everybody's going to discover trading. Not everybody's going to have a financial awakening and figure out, the markets are the only way to really make it in this world. But for people that are not involved in this stuff, how are they going to make it? Working 9-to-5s and busting their ass. I mean, some people have businesses and stuff too, which is great. But I have friends that have their own businesses, right? And some of these businesses, they're good, decent businesses. They provide a good service, whatever that is. There's so many of them, right? A lot of people at the Greek church have different businesses and services, but these people are working hard, man. They are working hard. And again, it seems like every time we turn around, at least at the grocery stores and stuff, we're paying more for less. Maybe prices will come down a little bit. But I think for assets, houses, maybe even houses, used cars, stuff like this, luxury cars, let's see what these prices look like in 2024. Because obviously it was the everything bubble. From crypto, housing, stocks, it didn't matter. Everything was in a bubble. In 2024, maybe these dollars are going to buy more than we could possibly imagine. So, if I wasn't watching the financial markets this whole time, and if I was not trading, I hate to think what I'd be doing today. But you guys let me know. Did I miss anything? Let me know what you think in the comment section down below. And, what do you think about the economic data? Are we going to see more rate hikes, or is this just a credible threat? And what do you think about Sam Bankman-Fried making bond? I got to hear your guys' thoughts on that one. So, as always, until next time. Oh, follow me on Instagram @MillennialTrades. And as always, until next time, I'll see you on the next video.